my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A second, small, bullish white soldier on Friday and a suitable follow-on higher to the previous session's combined bullish engulfing pattern and bullish white Mariposa. Above the market, we still have a changeover gap overhead, all the way up to 71.14, plus some recently acquired congestion in the 70.80 area, as well as a flatlining short moving average, currently 70.88. Meanwhile, below we have some support from the gently rising short medium moving average, currently at 70.09. Now, so far today, a really interesting day already. A higher open just under the short moving average and a drop down to the gently rising short medium moving average, which has rejected the fall, and we're currently set in between those two moving averages. This large move plus the small move on Friday have set up the conditions for a possible combined key reversal down and bearish engulfing pattern for today. So if we close tonight under 70.53, we'd have a bearish engulfing pattern. If we close a little further lower under 70.46, then we'd have a key reversal down. If on the other hand we close over 70.68, then we'd have a key reversal up and a hammer pattern as well. Anything else in between those levels and we'd have an outside day. At the moment we are looking for a key reversal down at the moment and a bearish engulfing pattern, but as I say, it's very, very close call. German DAX futures. A higher but still indecisive doji cross on Friday, as the cap on the market, which we saw all of last week, continued its work. It was also the latest in last week's originally intraday indecisive actions, but lately become intraday indecisive actions. The market finds itself pushed up by the gently rising short medium moving average, currently 15.421, but this is where the cap come in, but capped by the 50% projected Fibonacci line overhead at 15.629 and its recent partner, the flatlining short moving average, that's currently at 15.637. Beyond the nearby overhead resistances, we have the recent broken lower bull channel line, now moving away from the others. It's currently at 15.692. Now further below, we have the newly reassigned October 2020 to date uptrend moving higher, currently at 15.370. Like I've said all of last week, it is getting a bit precious now. So far today, slightly higher open and another move up to test the 50% projected Fibonacci line and the short moving average overhead, peaking just over both, but stalling just over it as well, and dropping down to look like yet another indecisive doji cross right now. Interestingly, the low once again has been higher, well, for right now. US E-mini S&P futures. Okay, it's not like I didn't warn that this may happen. I said for most of last week on the possibility that the way the market was reacting last week to the week before's weekly key reversal down, so that's 2 weeks ago, which was at the top of the market, might see prices here rise and breach the high in compensation, and then if this happened and prices closed on Friday over 42.46, then we'd have a strong immediate countering weekly key reversal up. Something that was worth considering, and that's what I said from Wednesday of last week at least. To put it bluntly, the time came on Friday for the market to put up or shut up. Well, Friday saw a new all-time high and a close up at 42.71, well over the criteria for an immediate countering weekly key reversal up. Thus we had one for last week. Now for those who like your technical analysis simple and easy, that's all you need. However, if you're seeking the truth, then looking at the last 2 weeks' actions of a weekly key reversal down followed by an immediate countering weekly key reversal up shows the heavy indecision, or heavy indecisive nature if you like, of the market on an intraday and now interweek level. And that's despite the new all-time high. Just be mindful of that when looking at this market. So far today, a higher open, highest open ever, and a further move higher to make another new all-time high, but it has been limited, as just above is a newly drawn upper rising wedge trend line, currently at 42.78. Now this pattern has become evident over the last few days and is close to completion. It will be interesting to see which side, upwards, as it looks like now, or downwards, that prices break. Additionally, a warning, as in all wedge patterns, watch out for false breaks. French CAC 40 futures. A higher but bearish black crow on Friday. A high enough opening to be, at least at the start of the session, a small follow-on to the previous session's reactionary bullish opening white Mariposa, including opening back up over the lower time, currently 66.39, of the recent late February to late March broken bullish shift pitchfork. However, that did not last long and prices dropped back below the lower time to close just under it, making it too small for either a bearish dark cloud cover pattern or a 2-day tweezer top pattern. Prices did not manage to drop as far as the rising short moving average support, currently at 65.84. Further overhead, we still have the 100% projected Fibonacci line at 66.80 and the recent high from last week at 66.87. So far today, a slightly higher open, but still below the broken lower time, and then a drop down through the short moving average. However, the market seemingly did not like it down there and prices have pulled back up over it, but only a little right now. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.